Hello, I'm Alex Davies, founder of Wealth Club. Today we're talking about forestry. Family offices, pension funds, even the Church of England have been investing for years, and experienced investors are also increasingly drawn to it. The appeal is clear. You could get tax-free income, and after 2 years your investment can become free of inheritance tax. What's more, forestry as an asset class has outperformed stocks, bonds and property over the last 10 years, although past performance is not a guide to the future. So what does investing in forestry mean, and why could experienced investors consider it? Today, I'm joined by two respected forestry investors, Anthony Crosbie Dawson of Gresham House and Paul Atkinson of Par Equity, to learn more about putting your money into this sector. So Anthony, who typically invests in forestry and why is it such a good investment?
Our investor base ranges from high net worth, experienced individuals to family offices to small institutions. What are they seeking? They like the fact that it's asset backed, it's sustainable. So we are buying the land and the trees that are growing on the land. It's delivered compelling returns and it's uncorrelated to mainstream listed bonds and equities, so it makes it an excellent portfolio diversifier.
Paul, do you see the same type of investors looking for the same sort of thing?
Completely. And adding to Anthony's points, in our case we're a multi-asset manager where forestry is one component of our funds, but a very compelling component. And our investor base tends to be entrepreneurs who've been successful building their own businesses or people who work for large international companies. And the forestry asset class seems to fit their interests very well.
And why is it such a good investment?
Well, I think if you look at the financial returns, better than 9% over more than 20 years, there's very few asset classes would outperform that. I'm sure Anthony would agree.
Absolutely.
But how do I go about it? Should I buy a forest? How can I get involved?
You can buy your forest outright and it could be Alex's forest, and the asset will be managed on your behalf by an investment manager. Or you can invest for a lower level of capital in a diversified portfolio of forests spread geographically throughout the UK, starting from about £100,000.
Yeah, and how do you go about it? What actually happens when I buy a forest? How do I make money out of it?
Primarily from selling the trees, from chopping down the timber, and there is a wide range of end users in the UK. So the timber that we are dealing with is commercial conifers, so spruce trees typically spruce trees, and these are being used for every purpose from building new houses through to fencing, decking, right down to biomass for burning.
Yep.
And is there any other ways I can make money out of it?
Yeah, certainly. I mean, what we look for in forests is good element of capital growth, and we look for some additionality to the investment. So wind farms may be accessible for some forest investments. Alternatively, we also do we buy quite a lot of new planting land, and that suits particularly our investors who are looking to shelter capital gains.
All of which is underpinned by the biological growth of the trees. So yes, across an average 40-year rotation, these trees are putting on volume growth of about 5% per annum. Right. No matter what else is going on in the world, anything going on macroeconomically, Brexit, Trump in the US, whatever it might be, the trees are still adding volume and value.
And in fact, in the last financial crisis, there was a flight to physical assets, particularly forestry. And Brexit, I think, is if it is a hard Brexit, is likely to be good for the price of timber and forestry in the UK.
And why is that?
Well, because the likely outcome is that the sterling will be depressed. We'll need to buy more locally, and the value of forests in the UK internationally will be higher in sterling terms.
Right. And what sort of age of trees are you looking for? What, is there a perfect tree? Are you buying? What are you buying?
Within the co-mingled portfolios that we manage, we're looking primarily for mature or semi-mature trees, being 20 years old and upwards. So we're chopping the trees down when they're about 35 to 40 years old is when we're harvesting them. So in order to pay our investors an annual distribution, we ideally would like to be harvesting in some of our forests each year. So we need to be at the upper end of the age profile.
Where typically are these forests?
Mostly in Scotland. They're all UK based. Yeah. The trees grow the best in Scotland. The soil is most conducive to quick growth. It rains a lot, and as long as there's suitable drainage, the trees grow very well with those climatic conditions. And furthermore, proximity to market means that you obtain higher timber prices, so the processing industry is centred around northern England and southern Scotland.
And Paul, are you looking at similar areas, and you looking at the similar sort of age of a tree, like 20 years plus?
So, I mean, in general terms, our investment thesis is very similar to Gresham, with a slight more of a focus on new planting sites, and our investors principally are investing for capital gains reasons rather than income reasons. So both investment theories are very strongly supported by forestry. In our case, our emphasis is slightly different.
Okay, and is there a specific type of tree you plant?
Well, the main commercial crop is Sitka spruce, and not only is it one of the fastest growing and most valuable crops, but also it sinks more carbon than, so from an environmental standpoint, it's actually a very valuable crop as well. But it is predominantly Sitka spruce, but within a new plantation, we also make sure that it fits in with the relevant planning constraints in terms of traditional forestry sitting alongside it, and habitat for birds and animals, and so on and so forth. And in fact, the planning process for new planting sites is very extensive, and has to conform to a lot of different criteria.
Could I do this myself?
I think there will always be investors who want to own their own forests and are sufficiently wealthy to own substantial enough assets for them to be economic. I suppose investing with a manager like ourselves or Gresham, you're getting a portfolio effect, and you can invest at a low level to get that portfolio effect. But at a certain level, some investors will always do their own thing. We
talked about Brexit, and you said it's not a risk, but surely most of my investors, when they first hear about forestry, they sort of automatically assume it's incredibly risky. So what are the risks? What could go wrong?
The main risks are insured against, so fire damage, although going back to how wet most of these sites are, fire actually is rarely an issue. What is more of an issue is wind, so these are upland sites, so in high wind speed winters, particularly if you get over 100-mile-an-hour winds on the west coast of Scotland, for example, in Argyll, you do get trees damaged by the wind, and you can insure against that, and we have a bespoke insurance policy for our investors. But actually, by the time the trees are mature, the salvage value of the timber is such that the insurance is not required, and we don't insure from 35 years old and above, because we can sell the timber if it's blown down. There are just slightly higher working costs for the timber buyer, which is reflected in the timber price, but it still has a value and gets processed in the sawmill.
And if it gets diseased, you can still cut it down and use it very quickly?
You can, yes. There is no known disease that commercially affects Sitka spruce trees, so you can't insure against that, but again, a way to manage that risk or mitigate it is to invest in a diversified portfolio of forests rather than a single asset.
But in fact, recently we had a forestry site quite close to an area where there'd been large dieback disease, and we just felled the forest, and we actually got a very good commercial return from the timber we took out as a result of preventatively felling some trees because of that disease. But as Anthony said, Sitka spruce is really not prone to disease risk so far.
It's fast growing, it's vigorous, it's the larch trees are not mature till they're 70 odd years old, so this species, Sitka spruce, is only half that rotation before being mature, so less susceptible to disease.
And if the economy collapses again, so let's look actually what happened in 2008, 2009, what happened to forestry as an asset?
Well, the timber price did indeed collapse in 2008, 2009, primarily because construction fell off a cliff. People weren't building new houses, so demand for timber, as for all other commodities, plummeted. But the interesting aspect of 2008, 2009 from a forestry perspective was that in spite of the timber price collapsing by about a third, the actual asset values continued to rise as people demanded real assets, and so there was a flight from risky equities to actually land-backed assets such as forestry.
So let's suppose there's another recession, which there will be at some time. Maybe that won't happen. Maybe the price of land has already gone up as much as it can. What would happen? What do you do, Paul? What would you do with all these trees sitting there waiting to be harvested but no demand? What happens?
It's kind of, I think globally it's hard to see a situation where there's no demand, given the way that demand for natural resources is running, the growth in world population, the growth in building. And any previous downturn has been relatively short in the lifetime of trees. And, you've got up to a 15-year felling cycle. You just leave the trees in the ground until the market comes back. And there's no requirement for you to fell that particular year or the following year, unlike, say, wheat or barley or a traditional arable crop.
That's absolutely one of the main advantages of forestry, particularly as a biological crop, that it's not beholden on the owner to harvest every year if prices are depressed. Leave to add volume and value on the stump.
So Paul, quite a few of our investors ask us about the sustainability of forestry as an investment. How sustainable is it?
Well, I think there's a number of points here which are relevant. The first one is that in the UK environment, all the forestry assets are regulated. It's a highly regulated industry, unlike some parts of the world, which means that when we fell trees in the UK, we have to replant. And in fact, in our case, we're planting more new trees than ones we're felling. But the second thing is that forestry as an asset class is an important part of the commitment to the climate change agenda. Planted trees that grow quickly sink lots of carbon, and that's important in terms of the UK's commitment to the climate change situation.
I agree with all that, and exactly the same within Gresham House managed forests. For every tree that we're harvesting, we're planting another 2 to 3 trees within a year of harvesting, so it's 100% sustainable.
Paul, can you just sort of go through, I think we know the tax benefits are hugely beneficial for individual investors. Can you just walk me through those?
Sure. There's no, after holding the asset for 2 years or more, there's no inheritance tax on the asset. There's also no capital gains or income tax on the growth in the timber. There may be some capital gains on the growth in the value of the underlying land, but in relation to the growth in the value of the asset you're buying, that's relatively modest in comparison to the growth in value of the trees. And for those investors who are investing in new planting sites, where they can actually shelter capital gains as well, if they've sold their business recently or whatever. So the tax benefits are pretty compelling. The financial returns are very compelling over a long period of time. So it's hard to look past it as an asset to sit alongside other assets. Our investors tend to be investing in multiple asset classes, and forestry is certainly one of the components to look at as being an attractive part of that portfolio effect.
If I wanted to invest in forestry, what typically would I need to invest? What's the sort of a minimum if I want to get involved?
Well, for buying an asset outright and being Alex's private forest, you'd be looking at about £2 million plus. But for an investment in a fund which owns multiple forests throughout the UK, the minimum with Gresham House is just under £100,000.
We've got the government always meddling, trying to remove various benefits. Is there any talk of actually these benefits going on forestry?
No talk that we're aware of, and in fact, rather the opposite to that. Politicians of all parties are keen on encouraging more trees to be planted. Forestry is a rare economic success story in many upland parts of rural Britain. It employs 40,000 people throughout the UK, 25,000 of those who are in Scotland. So the political will is very much supportive of forestry. So never say never, or try to predict what politicians may or may not do, but certainly there's no indication that any of the tax advantages are to be removed.
To that point as well, I'm sure Anthony will agree that if you look at the level of capital assets in forestry terms that change hands every year, and then say, well, what happens if the tax break disappears? The amount of extra tax collected really is not very material at all. And probably hardly worth the change. if you want to incentivise people to invest in what is a very important asset to the UK economy.
And would you personally invest in it, Paul, without the tax benefits?
Probably, yes.
Clearly, with the tax benefits, it's making it a very popular investment. Are both of you, is it hard to find forestry assets to purchase at the moment?
We are limited by the size of the UK market. Turnover in value terms is 100 to 150 million per annum. We are seeking to increase that by purchasing upland areas, sheep grazing typically, to be planted with commercial conifers.
You know, that is our strategy in terms of either identifying assets that are slightly sub-economic and need some work doing to them to make them more economic, or buying new planting sites where there's not as much competition and you're dealing directly with the farmers who are selling the land.
And let's imagine I've got £200,000 to invest. I'm slightly older than I am. We've got all these other places to put my money. Why should I put my money in forestry? First off, Paul.
Firstly, there's no inheritance tax. Pass it on to your children, free of inheritance tax. But if you look at the performance over time, it's an important, I think, an important part of a portfolio. And then many of our investors of my age are investing in forestry as part of their pension planning, not inside a pension fund, but outside a pension fund. So they're getting capital gain tax-free return against £1 million capped pensions.
I agree with all of that, and would just add the diversification benefits within an overall investment portfolio. The lack of correlation with mainstream assets makes forestry appealing on that front, and then you've got the biological growth underpinning the whole investment.
Anthony and Paul, thank you very much.
Thank you.
Thank you.